Hello, ladies and gentlemen. This is Spencer with Numbers Up Finance, back with another broad market analysis video. Today is Wednesday, February 20th, 2019, and let's get into it. So I'll start by saying this. We've not been posting very frequently for broad market analysis on our YouTube channel, and the biggest reason for that, we did just have the President's holiday, or President's Day, so the markets were closed for that. But overall, we've not been seeing very significant market movement in terms of price action. Every day it seems like we're kind of just moving up or down a fraction of a percentage point, and we're not really, there's no clear control for the bears or for the bulls. Nothing significant technical has been happening. We're kind of just continuing the same patterns that we've seen for weeks now. But we'll start off with the ES E-mini future 4-hour charts. And the reason that I'm showing you this chart is because it paints the clearest picture out of the major indices. And so the pattern that I'm going to show you, basically what this chart is it's meant to show you this nice bearish wedge that's been forming. You can see this bottom blue trend line that I have drawn here has now got 1, 2, 3, 4 very clean reactions. And then this top one has got 1, 2, it's close enough to give that a third reaction. Then we've been riding it for the past couple of days. And this wedge, it is very much so present on QQQ, SPY, and the NQ futures. It's just the clearest on the ES E-mini futures, which is why I'm showing it to you. But still, the pattern remains the exact same for all of them. And so what we've been seeing is after the first couple of weeks where we had this explosive move up, we've been seeing a lot of consolidating before we take a leg up. We hit this top resistance trend line, and then we shoot back down. And again, right now we're right up at this top resistance point. But the thing about this wedge is that it's getting very, very pinched in. From the top resistance here to the support, it's only about a percentage point. And so at some point, it is going to have to break. It is going to have to either break to the downside, which is looking favorable. Obviously, nothing is guaranteed in trading, but it's looking favorable at this point. Or alternative, we could break to the upside, but even in that case, there's not a whole lot of room that we have to move upwards in the near-term future. And so taking a quick look at the daily chart for ES, the reason I pull up this chart is just to show you the magnitude of what we've been seeing, this movement up that we've been seeing. A couple things that I wanted to point out. The very first thing is that we're obviously coming up to a very, very significant resistance zone in terms of price resistance. We had the previous triple top that formed here on the S&P 500, and this triple top also aligns a couple months prior in early 2018. We had a couple of reaction points right around that same zone. And the second thing that I wanted to point out, and this is regardless of whether or not you're overall bearish or overall bullish in the market going for the long-term future, but momentum is incredibly, incredibly overstretched to the overbought side. And I drew this yellow line on the MACD indicator. It's a momentum indicator, and basically this yellow line, it's not exactly a resistance. I wouldn't call it that. It's more so just as an indication of how, relatively speaking, how overbought or oversold we are. And so for the past years, this is a 4-year look on the daily chart. For the past 4 years, we've come up to right around this level on the very most overstretched times, and then the MACD started to turn back. The one time that we actually went past it was early in 2018, and we're just past it now. But look, you can see what happened then. We had a very sharp correction, a very sharp sell-off, double-digit move to the downside. And even back here, once we came up towards this yellow line and got overextended on the MACD, even that was indication of relatively significant snapbacks. These are still multi-percentage point snapbacks that we had, even if they look small compared to the bigger movements that we've been seeing recently. Moreover, we've been in a downtrend now, looking at the macro trend. We're still significantly below the all-time high that we've set a couple months ago. And so look, at some point, pretty soon, we're going to have to turn back, and that could happen in a couple of ways. We could see a sharp fall off, which might lead us to lower lows. Alternatively, we could just see consolidation and a small pullback, in which case the MACD would still retreat back towards the zero line. But regardless, either way, we're incredibly overextended in terms of momentum and price. It is very favorable that we're going to have a pullback. It's just a matter of when, really, and also how big that pullback is going to be. Now taking a look at a smaller time frame for the E-mini futures, we can see on the hourly chart we're having the same trend that's continuing to repeat itself over and over again, forming again. That trend, we form these bearish divergences that are pretty clear on the hourly charts. Higher highs, momentum is going downwards, and then what happens is we usually break a mini trend line. So here we can see that we're moving up a little bit there, and then we broke it, and we saw consolidation there as a result of the bearish divergence. Here we can see we formed a nice trend upwards, bearish divergence, broke that trend line, saw a sell-off down to the support. Again, an even smaller pull-up in this bearish wedge, bearish divergence, we broke the trend, came back down and tested the support. And once again, what we're seeing on the hourly chart is another bearish divergence forming. They're getting consecutively smaller and smaller than the previous one. But look, eventually, we already mentioned it, but eventually this wedge has got to break one way or the other, and these bearish divergences lead me to believe that it will likely be a bearish break of support rather than a bullish break of resistance. Now, that's not to say that the break of resistance cannot happen, but the analysis, the technicals are saying otherwise, that it is very unlikely and improbable that it will do that. We also just mentioned that the risk-reward favor of the longer term seems to be favorable short. We've got heavy overhead price resistance, and a lot of indicators are saying that there's got to be a pullback soon. There's a lot of talk right now in the mainstream financial world that this bear market, the possible bear market that we've been seeing, has been foiled by this move up. And personally, I disagree with that, but that's for another video. It doesn't really matter whether or not you are long-term bear or long-term bull. It's fairly objective to say that we're not going to continue moving up at the velocity that we have. At some point, this rubber band is going to snap and we're going to have some amount of pullback. It obviously depends what your position is on the broad term. This might be a significant pullback, it might be a small pullback, who knows, you might not even expect a pullback at all. But right now I'd just like to point out that the divergences are still very much so in play. The fundamental trend that we've been seeing, this wedge pattern that we've been making for the past couple of weeks, still very much so present, and we're coming to the end of it where obviously we're just going to keep getting squeezed in until we run out of room to get squeezed in, and at that point we're going to break it. I'd certainly say that the probability is favoring a downwards break, but again, nothing's out of the realm of possibilities. With that, I'll leave you there. If you like the video, be sure to leave a like, comment, subscribe to us. It's greatly appreciated. We'll try to be posting a little bit more frequently. We're expecting some more significant market action in the coming days, coming weeks, and that will certainly lead us to be more active in our posts. But until then, make sure you get your numbers up.